Every morning, millions of people wake up with the same goal: work hard, save money, build a better future. It's the advice we've heard since we were children. But what if one important piece of the puzzle was missing? Imagine you finally saved your first $10,000. You don't spend it. You don't lose it. Nobody steals it. 1 year later, it's still sitting safely in your account. So everything should be fine, right? While your bank balance stayed exactly the same, the world around it quietly changed. Groceries cost a little more. Fuel costs a little more. Coffee costs a little more. And without noticing, your money started buying less. That silent change has a name: inflation. It quietly makes everyday life more expensive. Inflation simply means that, over time, the average price of everyday goods and services increases. Your money didn't disappear. It simply loses a little of its buying power. This happens almost everywhere. In Australia, prices rose by around 3.8% over 1 year. In India, around 2.75%. Different countries. Same idea. Money isn't the goal. Money is simply a tool. We exchange our time, our skills, and our effort for the freedom to build the life we want. Does this mean cash is bad? Not at all. Cash has one of the most important jobs in your financial life. It protects you when life doesn't go according to plan. Cars break down. Phones stop working. People lose jobs. Medical emergencies happen. An emergency fund doesn't make life perfect. It gives you time to recover. Before building wealth, protect yourself first. That's why many people build emergency savings and consider appropriate insurance before investing. Once your foundation is strong, your money has a new job. Not just to protect you, but to grow alongside you. While you're studying, working, or spending time with your family, your investments have the potential to keep working in the background. If investing can help grow wealth, what exactly should you invest in? That's exactly what we'll explore next. Once you've built a strong financial foundation, your money gets a second job, not just protecting you, but helping build your future. Saving and investing are both important, but they solve different problems. Saving helps you prepare for tomorrow. Investing helps you prepare for the next 10, 20, or 30 years. Imagine every dollar you earn has a purpose. Some dollars pay today's bills. Some protect your family. And some quietly build tomorrow's opportunities. People around the world choose different ways to invest. There isn't one perfect investment. Only the investment that's right for your goals, your timeline, and your comfort with risk. One popular option is an index fund. Instead of relying on one company, it spreads your investment across many. Think of it like owning a basket instead of a single fruit. When you buy a share, you're buying a tiny piece of a real business. If that business grows over time, your investment may grow with it. Some people choose property. It can create rental income and long-term growth. But it also comes with responsibilities, costs, and risk. Sometimes, the best investment isn't in the market. It's in your skills, your education, and your ability to earn more in the future. Imagine standing at two different roads. One feels safe. The other offers greater rewards, but also greater uncertainty. That's how investing often works. Many people spend years trying to perfectly time the market. But history has shown that staying invested for longer has often mattered more than finding the perfect day to start. When your investments earn returns, and those returns begin earning returns too, small progress can slowly become something remarkable. That's the power of compound growth. So if investing is about building wealth over time, what exactly is trading? Let's find out. By now, you understand why people invest. But there's another path you'll often hear about. It's called trading. Although they both involve financial markets, investing and trading are two very different games. Many people think trading is gambling. Professional traders see it differently. They don't try to predict every move. They manage risk, follow rules, and accept that losses are simply part of the journey. The goal isn't to win every trade. The goal is to protect your capital. Because when you protect your capital, you give yourself another chance tomorrow. Before risking your money, invest in your knowledge. The lessons you learn today can save you from expensive mistakes tomorrow. Most people think wealth begins with investing. Some think it begins with trading. But it doesn't. It begins much earlier. The moment you understand how money actually works. Nobody is born understanding money. Every confident investor, every successful entrepreneur, every disciplined trader started exactly where you are now. You don't need to become rich overnight. You simply need to make one better financial decision today than you made yesterday. Imagine meeting yourself 10 years from now. What would your future self thank you for? It probably won't be buying one more thing. It'll be the decision to learn how money really works. Because the choices you make today shape the opportunities you have tomorrow. Today wasn't about telling you what to buy. It was about understanding why investing exists. Next time, we'll explore where people invest and how to choose investments that match different goals. If you found this lesson valuable, join us. Because this is only the beginning of your financial education journey. Remember, the market doesn't need to change. Our decisions do. Continue your journey with the next lesson from MU Wealth Academy.